Hi there, and welcome to Know Your Options here on BNN Bloomberg. Every 2 weeks on Thursdays, we take a close look at the world of options trading, exploring the fundamentals of puts and calls and how you can effectively incorporate them as investing tools to maximize returns and manage risk. Our expert guest each episode of Know Your Options is Thom, CEO and Portfolio Manager at Moat Financial. You can ask questions of Chris, and we invite you to do so right now. Pick up your phone if you've got a good options question and call us at 1-855-326-6266, or you can also email us at knowyouroptions@bnnbloomberg.ca. We'll get Chris later in this program to answer as many of your questions as he can. That's coming up before too long. In the meantime, let's welcome our expert guest to the show. He's in studio today with us. As you can see, Thom is CEO and Portfolio Manager of Moat Financial. Thanks a lot, Chris, for joining us again. I think this is episode number 3 of Know Your Options.
Yeah, I know. Great to be here. Great to be back in studio. And
how do you like talking to our viewers so far on these questions?
You know, it's been great. I mean, I think options is something that's been sort of under it hasn't been covered as much as it should, and you know, the usage of them through ETFs and just individual investors is increasing year after year, and so it's great to highlight it here.
It's important to know what you're doing. Is that fair when you get involved in options?
Yeah, I mean, all aspects of investing, you should know what you're doing before you put money to work, but options, maybe a little extra care and attention.
Okay, let's go right back to some fundamentals, and we'll just remind viewers who might not be familiar with the basic concepts, what a call option is, what a put option is, and then Chris will talk to us about using these tools to achieve diversification, which is a fundamental of sound investing. So here's what a call option is. A call option is a contract that entitles the owner the right, but not the obligation, to buy a stock, bond, commodity, or other asset at a set price and before a set date. Here's what a put option is. It is almost the flip side of that. It is a contract that entitles the owner to sell a specific security, usually a stock, by a set date and at a set price by the writer of the put. Okay, let's get into the topic you want to talk about today. That's diversification. I think all investors know that that's important. You shouldn't be too overly weighted in one asset class or another. How can options be used to achieve diversification?
Yeah, so like you said, diversification is important for all investors. You don't want to have all of your eggs in one basket or invested too heavily in one area or one stock. What can happen to investors, specifically income-oriented investors? So obviously a lot of people who watch this show are, retired or drawing an income from their investments. You can end up just owning a whole bunch of high dividend paying stocks. And while those are great when times are good and interest rates are steady, we saw in 2022 as an example where rates were going up. A lot of those stocks, great companies, great businesses, but a lot of them were going down. And so part of what hurt investors concentrated in those areas was that they just owned too much of one specific part of the market. And they didn't own more growth stocks. They didn't own non-dividend paying stocks. And so using options allows you to own some other parts of the market and generate the income that you're trying to achieve without having to have everything so highly correlated in these high dividend paying stocks.
Okay, so some of the strategies you've got in mind with respect to this are things like covered calls, cash covered puts, and hedging strategies as well. Take us through some of these strategies.
Yeah, so the covered calls, so that's a great example where you can own a stock and then you sell somebody the right to buy it from you at a higher price, and they pay you for that right, and that generates income. And they will do that, and you can sell calls on stocks that have dividends, but also ones that have no dividend at all. So you can own these companies that are reinvesting in themselves to grow and generate the income that you're trying to achieve. On the put side, you can sell puts to enter stocks at a lower price, give yourself some downside protection, and achieve that income. And then go right to the last one with hedging. If you have an individual position that you think is maybe a bit overvalued, but you don't want to trigger a gain, or you're worried about, what's Mr. Trump going to come up with next for the overall market, you can hedge your overall portfolio and take risk away for a period of time. So you just have that flexibility to do more strategies than just buy and hold and hope your stocks go up.
So provide us an example of how options could be used in hedging a position.
So hedging a position, you can buy a put option against that position. So say you own a stock, you buy a put at a lower strike than it's currently trading, and you're effectively buying insurance. Now there's some other elements you can put into that to reduce your overall cost. You could sell a call option, so you are bringing in some income to pay for that put so that you're not just overpaying for insurance. But there's a lot of different ways that you can build it so that you can reduce risk going forward.
Mm-hmm. We get a lot of calls on market call on covered call ETFs. These are ETFs that use a covered call strategy. What are your thoughts on those tools?
So it's a great way to get started. If you want exposure to that space, and I think, quite frankly, I think everybody should. You can just buy an ETF and you're up and running. So the only things I would caution, I guess, if you want to say that, is make sure you check the MER. The MERs on these can be a little bit high. And, make sure you're not paying an advisor and the MER and all that. And then just make sure it holds a basket of companies and equities and a strategy that you want to be a part of and that you want to own. Okay.
A couple of points you made in some notes that you prepared for us on this is that income investors, in other words, investors who are seeking income, can be under-diversified. Is that an over-reliance on dividend-paying stocks?
Yeah, absolutely. I mean, we're in an era now, maybe 2 years ago, interest rates, you could get 5% on a fairly low-risk bond. Those days are gone for now. So you're seeing income-oriented investors just piling into the telecoms and the pipelines and, the higher dividend-paying energy stocks. And while a lot of these are great companies, you just can't concentrate yourself in one area, because if we do see an increase in interest rates, they all move down together. You just don't want to be too concentrated. You want to own some growth. You want to own some technology. You want to own some other areas of the market. And
you also made you've also made the point that buy and hold strategies can be difficult.
Yeah, you're reliant on, for long only traditional investing, you have two ways to make money with stocks: dividends and them going higher. So you need to be timing when you're getting in or buying at lower valuations and then selling at higher valuations. Using options adds that third leg for generating returns. It really kind of increases your odds of making money. So, I don't want problems with my compliance here that, I'm pushing this a bit too hard, but it really does give you a third leg for return generation, income generation, and increases your chances to get equity-like returns with something in between the bond and equity market.
That's Chris Thom. He's our expert guest on Know Your Options. We're in the early portion of the program. We're going to take a break. After this, Chris is going to answer some of your questions on options. You can email us or you can call us. Here's the contact information. The email address is knowyouroptions@bnnbloomberg.ca. The phone number is 1-855-326-6266. So get those questions in. Chris Thom will answer your questions on the other side of this break. We also want to update you